Hey everybody, it's Pete. Good morning. It is Wednesday morning, October 21st, 2020. Well, we're not lacking for volatility. We're not lacking for earnings right now. That is making it a stock picker's market. One thing I want to start out with today, which is kind of public service announcement, which is we are not in an easy market to trade right now. There is very stock specific great ideas out there, JKS being one of them. Hopefully you've been following and trading that along with us. But for the most part, the market is in a flux situation right now. It's kind of stuck in neutral where everybody's waiting for the election. Everybody, I think, mostly is waiting for stimulus package. And if you're a day trader, especially, you saw the market yesterday where it exploded to the upside, came all the way back down, and the market, the SPY specifically, ended up right where it opened. We call that an indecision candle, which is a melted candle, in other words, where the open was pretty much in exactly the same spot or pretty close to where it closed. And that represents a whole bunch of trading, and it doesn't matter what time frame. It could be a 5-minute chart, it could be a monthly chart, but it traveled all of that distance and then ended up right where it started. So that's why we call it indecision. The name is melted candle because you can see the candle melted all the way down, but really what it represents is how to use it. It's indecision, which basically means it tells us nothing. And we'll take a quick look at what that looks like on the chart of the SPY daily chart from yesterday. But what I want to get across, and I can't express this strongly enough, this is a market to be using your stop losses. This is a market to act like a pro, whether you're trading full-time or not, and manage your share size appropriately. This is not August anymore. And I keep saying that every day because I want to help you understand that first and foremost, if we choose to put money into the market, we are risk managers. And that means that we are looking for spots to find good trades that we expect to follow through. But our first job is to manage the downside, because the better job that we do managing the downside, the longer we're going to be in the market to understand how to make more money. So we're in a tougher tape right now where you need to work orders. In other words, when I say work orders, I think this is kind of important, where you're putting on your first initial position, which is lower than maybe you normally would, and then wait to get feedback from the market. And as it moves in your favor, that's when you start to build your position. I also want to announce, if you haven't done it yet, I'd like to invite you to our free brand new trading forum, Top Trading Pros. I'm very excited about it. No cost. Just click the link down below. I'd love to have you in the community. We're going to help each other make some money and answer any of the top challenges that you have in the markets right now. So what do we have? We have Netflix, we have Snapchat, we have Tesla, and a bunch of other earnings today. We have some strong stocks that are continuing to break out. We have some strong stocks that have pulled back, which is pretty interesting as well. So buying a pullback on some of these strong stocks is I'm not going to say safer, that's not the right word, but it's a strong stock that's kind of letting off steam that is now giving us a better spot to look for a bid and look for new highs in the direction it just came from. So we're going to head over to the charts. We're going to take a look at some new ideas. And don't forget, click down and get into the forum. I'd love to have you in there. And if you really find some values in these videos, please click subscribe too. That would mean the world to me. All right, so we're going to head over and we're going to start out with the SPY. And I want to really just show you the difference in a really quick chart reading lesson where you can see energy type candlesticks where the distance between the open and the close is very far. And then this here is the opposite of that, which is a melted candle. So obviously a small body, but what that represents is indecision. When you have an indecision candle that is also an inside candle, that represents massive indecision. Not only did it open and close in the same spot, but it traded completely inside the previous day, which Todd in our community is now calling the mother candle, which I kind of like that phrase. I'm going to keep using it. So as far as earnings are concerned, obviously Netflix missed yesterday, was a big one. We have Tesla after the close today. So we said over 560s where we'll be looking to bid for Netflix yesterday, looking for new all-time highs, and it's actually trading in the opposite direction because subscriber growth decreased. That's just the way their entire business is built. So we did not look to initiate a new trade. And I will say this straight up because I get messages all the time about this. I am not looking to bid stocks that disappointed on earnings. They've been following through the downside, so I'm letting them go. I'm not going to be in Netflix. Other earnings that came out yesterday is trade that I will be in today. which is Snap. Snap is actually trading up as of right now, a few hours before the market opens, roughly 24%. So I'm going to be looking to bid Snap intraday, but looking to initiate a new swing trade long. The question that I get is where and how far can the stock go? You can see the stock normally only moves $5 on a bullish move. And right now it's actually, as of right now, it's up $6.76. So you can make a case that it's already gone what it normally does. So I'm going to be looking to day trade the stock. If it closes strong, I'm going to look to hold it because this story has some good news. After pre-market today, before the market opens, Verizon is scheduled to report, and Abbott Labs as well. Abbott to me is a little bit more interesting. That inside candlestick is setting up a break from this 3-week consolidation. After hours though, Tesla is the granddaddy that we are looking for. Interesting. One of my friends noted yesterday, first time that it sold off 3 days in a row like that in a while. And again, if you're a regular viewer of the channel, we've mentioned that these melted candles, now you can't unsee them, right? And it really represents indecision. And Tesla's mostly been indecision for the better part of 7 weeks now. And a lot of the traders that come into the boot camp that have no experience, that were used to Tesla just going up, going up, going up, going up, did not adapt. And now they understand that there are certain edges that are stronger, and you pull yourself back. You don't take unnecessary risk. This is interesting that it's pulled back prior to earnings. I am not going to do anything unless the stock gets above 460 as a buy, and I'm not looking to sell short. It's been a horrible sell short for a long period of time. So again, very similar to what we're looking at in Netflix yesterday, above 460. I'm looking for 3 to 5 days of solid buying in that direction. Also scheduled to report today is Lam Research, Chipotle, and LVS. They look like they were catching a little bit of a bid there for a while, but they have not. So out of all of the earnings that I just discussed, obviously Tesla's the one. A couple of things to keep an eye on today is oil inventories at 10 o'clock and the Fed Beige Book at 2 p.m. So Fed Beige Book, Tesla earnings, Snap earnings, Netflix earnings. You possibly could day trade Netflix today. If you're an active trader and you really understand what you're doing, Netflix could be a really, really good stock to be involved with today, as long as you don't have a longer term opinion. As far as some new stocks to trade today, we're going to be taking a look at JKS. Now, the thing with JKS is it finally went parabolic on the daily chart. We've had quite a few questions about when do we think the stock is going to reverse. Well, parabolic move with massive spike in volume. Parabolic means large green candlestick, in this case with a big spike in volume. This looks like it's finally a blow off top. Now, does that mean you short sell the stock? Absolutely not. Does that mean you just get out of your long? Absolutely not. But what it does mean is because of that volume and price action, using your tape reading skills, you start to move your trailing stop up with a little bit more aggressiveness, which means that you move it closer to the point where you almost think it's going to get hit if this is a longer term swing trade. CSIQ, and by the way, these stocks also traded double their normal volume yesterday. CSIQ is a little different story. This is now just breaking out for the first time after a 5-day consolidation. You could actually make a case that it's a bull flag. The long here is as long as it's above 42 breakout. So if you didn't get long, yesterday's high or a spot today would be the new long. 42 would be the stop loss there. CAR is another one, double normal volume. You can see the spike here. This is a different situation though today. And I want to be very clear on this. CAR has not been able to break out and stay there. We have 4 really solid days of CAR closing near the highs. Yesterday was a parabolic move on an increased spike in volume. So I'm just going to say what this is. We have a trade in the community called a saturation play. If CAR opens higher, pushes higher off the opening, this is an aggressive trade for active traders. I'm looking to sell it short as a day trade today. I'm not looking to buy it. SFIX, that hopefully you're in this trade that we called out probably about two weeks ago, right over here on the breakout where we said we're waiting for it to be well bid over this breakout level. Getting some nice follow through right now, excuse me. And you can see the room that it has to go. It's got plenty of room. We're looking for a gap fill here at around 39. So we have about $3.50 more there. I would not initiate a new swing trade here because now it's 3 days into being well bid. MU is an interesting one. It keeps getting up to this level and failing. So I got a few messages. Are we looking for the trade from 54 to 60? It's kind of a tough trade here because you can see it failed, and kind of hovering here. So what I'm looking for now is I want to see it well bid and close strong over 54, and then I'll look for the next move higher. A few stocks, these are interesting ones, strong stocks that have pulled back, giving us a chance to look for stocks to bid now. Twilio, I'm looking for one more push down. So a lower opening, I'm looking to bid today. Zoom, very similar. So we're looking for strong stocks that are closing weak. BYND, they might need one more day. BYND actually pulling back a pretty decent amount there. I think I like that one out of all of the ones I've called out so far. Big C, Big Commerce. Actually, this is nice because we were waiting for this to happen. I like this as well quite a bit, simply because it really didn't give us a chance to get in here, just kind of like melting higher. So the fact that now we have 3 days closing below the open, 2 days of well offered. I like this one today, looking for a bid. I'm looking for what we know as an opening range breakout today. DDOG is another one that actually now has pulled back very similar 3 days. And now you can see that a lower opening will take it into a trend line. So we like that one as well. WRK, Westrock, also closing near the lows, and Roku. So I think out of all of the ones that I just gave you, D-Dog and Big C, I like the most. So look, there's a lot going on here today. There's a lot to pay attention to. The stimulus package, whether anybody wants to admit it or not, is what the entire market's waiting on. You need to be a stock picker in this market. You need to have your individual stocks that are strong and weak, which is kind of funny. We had some members of the boot camp that only traded the bull market off of the low in March. And they were like, oh my gosh, it's so easy. Everything's going straight up. Do you ever look for short sales was a question that we had brought out there. And I was like, yeah, that's a normal market where you have stocks on both sides. And now we're starting to see that a little bit, which we're getting kind of back into what is normal versus the Fed-induced coma that we were all in with the stimulus package. Now, again, the market and for the closings, and especially for small businesses, it's needed. But what you don't like to see is that the entire market is hinging on it. That's not good. That's not really what we want to see. We want to see the market supporting itself, and hopefully we get out of this whole thing. So be a stock picker in this market. Please stick to your stops. This is not a market to give stocks extra room. Your first loss will be the best one. You can always re-enter the trade, and take a look at some of these individual trades right now, because the market itself, the setup in the indices, is not really helping us in a big way. So you really got to be on top of your game right now. If you have any questions, leave a comment. Join our community. I'd love to have you. Click the link below the video. And if you really want to take it to the next level, join me in the boot camp. I'd love to see you in there too. Have a great day.